In this video, I'm going to show you my #1 reversal strategy for Forex, something I trade every single day, usually on the daily chart, but it works on multiple time frames. I've traded this on the 1 hour chart before, the forward charts, as well as daily charts. We'll go step by step through how this works, and I'm going to give you sort of all the secrets about this strategy. Let's dive right in. Now we are on the chart right here on TradingView. And what I like to do first is go on a pair that's sort of in a constant side of the market. So we have a lot of chances to trade reversal of this pair because it's going back and forth between levels. And I want to usually look at the higher time frame for my levels. Now that's the first thing. If you have a pair where you cannot look at levels and cannot identify levels on the charts, then that's not a good pair to look for reversal trades. That's a pair that you want to look for maybe trend, maybe something else, or maybe you just want to avoid it altogether. But the key here is you want to have a pair that's going sideways. Like USD CAD, like many of these pairs in Forex right now, probably not like Euro JPY because that's trending, but more a pair of going sideways. So I'm going to go with USD Singapore dollar, which is very similar to USD CAD. People don't look at this pair too often, so we'll just use that. What I first want to do in this pair is look at areas of support and resistance. Now you see on my chart, I have a little price tag here which shows me the highs and the lows. It's called on TradingView pivot high low. You just search this on your indicator search, pivot high L or pivot high low, and you'll find this indicator really quickly on the charts. At this, you can put whatever period you want. I find that for me, the 21.21 works fine. 10.10 also works fine. It's a bit more close to the price, but that will give you a good idea of the pivot high and the pivot low. So giving you an idea of where the price is and where it comes back to multiple times. Now here I have these levels on the charts, pretty clear. So I'm going to draw some support on this. Now my chart here is not too updated. I'm actually going to move this line over here. This is our support clearly. We have a resistance now in the market somewhere over here. We have another one somewhere over here. If you use a weekly chart for this, you can very easily put this as round numbers. So to make it sometimes simple, I go on the chart. I'm going to go and change the coordinate to here 1.36. 1.36 gives us a nice round number, and it's actually pretty accurate with the price that is going on right now. This works better on the weekly chart, but it can also work well on the daily chart if you want to. Now, depending on what time frame you trade, you want to go 2 time frames higher than the one you're trading. So if you trade the 1 hour chart, go 2 time frames higher. That means 4 hour and then daily chart. If you trade this on the 15-minute chart, then you go 2 time frames higher. That would be 15, 30 to 1 hour. It's 2 time frames higher. If you trade this on the 5-minute chart, you go 15, maybe 30 or 1 hour chart. 1 hour chart is good. You can also do 4 hour chart if you prefer, want to have some more room. But that's usually what I do. It's very simple. Okay, nothing too fancy about this. Now these lines on the chart here, they are not lines, they are actually zones. So if you want to add some buffer, you could go here and put a nice little area like this. Usually it's about 100 pip on the daily chart around the level. So here we have we have 60 pip here. This is a bit more tight. But in general, this could be around 100 pip in total, or maybe a little bit less if you're dealing with lower time frames. And this zone is just to signify that we have a area here, which is a support. I'm going to put this green, and I'll leave it like this. Then here we have at the top, we have a resistance area. I'm going to go this, I'm going to put it to green. I'm going to go put it here and change it to red. Now you have a good idea of where to look for trades. Now notice how price reacts to these levels, right? We're not going to trade daily charts here. We'll look at the zones and daily charts, but notice how price reacts, right? Zoom into this and look how we have these wicks. When you come back to retest again, we have these wicks. And once again, last time, we have these wicks over here. Now what that tells us is that price is reacting in those levels. Now we could trade just this on daily charts, but that's not really reliable to me. I prefer to go on lower time frame for this stuff. I'm going to go on the forward chart, see how price reacts to these levels where we have this resistance area around 1.37. We'll go bar by bar on this chart, showing you how that works out. Now, for example, I'll do is only price action. Then I'll jump in and do another example with indicators. If I use indicators to look at these reversals, so you can compare both. Pick which one you like the best. So let's go with different candlesticks. Okay, we are near the level, not quite yet. We're moving up a little bit. Look at how that wick, then we recovered. Price was bullish still. Not a good sign of reversal yet, but we are pushing through. Looking at how we make these wicks here on the daily chart. Now look at how this is an engulfing candle, right? What I mean by engulfing candle, my own definition is it has to close below the low of the previous one. So here was our low. Our low was, I'm looking at the Price at the top left here, our low for this candlestick was at 1.35762. Or closing here, we closed below the low. Our closing was at 1.3575. Okay, so we're a little bit below. Not by a lot, only a few pips, but we are still below the low. That gives you a good place to look for sell trades. So I'm going to go and place my order below the low. And if you are triggered, I'll keep it in the market. I'll leave the trade on. But if we're not triggered on the next candlestick, I'll cancel the order. I don't want to be in a trade that's wishy-washy, going back and forth. I want to be in a trade where it's going to a clear direction and moving quickly. Entry below the low, stop loss above the high. And our targets will be 1-to-1 because I want to make my profits quick. I want to be able to get out quickly. And I'll have a second order that I keep for a bigger take profit. All right, so this is the first one. I'm going to draw a little line over here. So if we get here, that's my first exit. I'm going to close half the trade there. And I'll have my other half for 2-to-1 in that case. I like 2-to-1 a lot. I would like to target this low maybe. We can even do more than that if we want to. We could have a trailing stop loss to stay in the trade longer. But just like 2-to-1, it gives me a good target. So now let's do also 3-to-1. We might do 3-to-1. Why not? Put it here. 3-to-1 in this market is not unreasonable. It's near the low we had before. It's very reasonable. So we'll just let it run like this. And we are triggered right here. Okay, we see we didn't really go below that much, but we go below the low a little bit. We're triggered. Okay, then we start to go down. Bit of back and forth. Okay, we're stepped out here, right? This is where sometimes price action by itself is okay, but not the best. You can always have missing trades there. You can always get stepped out a little bit. So you got to be careful. Adding some indicators to your price action can add more confluence to your trades. We'll play this again. I'm playing this again here. We went down a little bit. Then we are starting to come back up. You'll see price move up pretty quickly on this market. And once again, we have the same signal we had before. It just looks a lot bigger here. So we have this price making an engulfing candle, closing way below the low, which is very strong. And we are triggered here next candlestick. I'm going to go and put a sell trade at this level again. Yeah, the first one doesn't work, no big deal. We can always re-enter. It's better to get out and re-enter later than to keep a losing trade on for no reason. So our entry is right there. Now our targets will be quite wide because we have to deal with that big move. 1-to-1 first target, do just like that. 1-to-1, and then our 3-to-1 will be right here. Okay, somewhere far below. We'll let the market run here. Okay, going well. She's looking very good here. 1-to-1 is triggered on this candlestick, even though we have a big wick. That's still good for us. And price continues to fall down slowly but surely. And I think we've triggered our 3-to-1 now, by now, probably. Let's have a quick look. It took a bit of time, but we probably got there. Here we go. Cool. Okay, 3-to-1 is triggered here. Perfect. Looking good. So this is how we are able to catch these moves. Only price action, no fancy indicator, nothing too complicated here. It's very simple, very basic. Engulfing candles, which work well in the Forex market. We also had, by the way, I'm just going to point this out, we also had a nice entry right here. Right? Again, bearish engulfing candle, stop loss. We'll go here above the high. Our entry was right over here. And that will give us a very quick target, more easily achievable because we have a shorter, smaller trade in that case. 3-1 is here. That was a good re-entry, which if we wanted to, we could have got it in very easily. Right? That's the same setup, just a little bit smaller. Also looking quite good. Okay, so see how this works out. We catch reversals very easily off levels that we identify on a higher time frame. We go in, we place our trade with these engulfing candles, which are very reliable, very strong. And then we can kind of ride the trend for a good while. Now, what about doing this with indicators? Well, we can do that too, very easily. I'm going to move here to a 15-minute chart just for a quick challenge. I'm not trading this time frame too much, but I like to look at lower time frames sometimes because we can have very quick targets, very big moves. And we can really, if we are targeting a move of the daily chart or the 4-hour chart on a lower time frame, that gives us a really good reward to risk. What I'm going to do here is add the Bollinger Band, though, because I love Bollinger Band. They give me a good idea of where the market's going and what's happening in the market out there. So I'll show you how that works out. Now, Bollinger Band, what it's going to do is it's going to filter out a lot of our trades with some kind of price movement, with standard deviations. Just looking at where the price is above or below the Bollinger Band. I want to be able to sell when it's near or above the Bollinger Band, and then buy when it's near the bottom of the Bollinger Band, the lower bands. So a lot of these trades that we had before, we can lose the first one. So we have some examples here. We don't have any trade except these blue triangles at the bottom, where I kind of have a custom indicator to show my setup on the chart. These are bullish. We don't want to buy. We are at the resistance area. It will be dumb to buy. We'll only focus on selling. We'll let price play out, see how that goes. Here we go. We have these bullish setup, which we don't want to take because we are again near a resistance area. We don't want to be buying here at all. Now we'll see how price went out of the Bollinger Band here. So that means we have an extreme point. Now it could still be trending up. Doesn't mean we'll go down. We need to have a clear sign of the seller stepping into the market. Okay, the buyers are still in, no sellers yet. And boom, that's the sellers coming in. The sellers are coming in, making an engulfing candle. Again, closing below the low of this candle before. So engulfing candle. And then we can enter this trade on the next candlestick. I'm gonna put a sell order below. My stop loss is just above. My first target, a 1-to-1, ideally near the middle of the Bollinger Band. But if not, somewhere before the bottom. That's important. If you target lower in this bottom band of the Bollinger Band here, we have less chance to achieve it easily. But if you target somewhere within the bands, it makes more sense. So 1-to-1 is our first one. Then our second one is going to be, I'm gonna go and look at the structure here. Because we are lower time frames, we can retarget a bigger structure. We'll look for a move of the daily chart. I'm gonna go and go here, somewhere like this. It's 4.2-to-1, right? I'm getting a bit ambitious here. Maybe it will be less in live trading, but this is a level that I can easily target, I believe, of this move. Now I'll play this out. Okay, we are triggered here, next candlestick. We move down, or 1-to-1 is probably achieved somewhere on there. Okay, we continue to go down once again here. And let's see how this plays out. Okay, in the bottom band, yeah, we definitely took profit there. This will be a nice place to re-enter the market or add more to it if you want to. If you're someone who likes to scale in. See how we have another engulfing candle that formed right over here. Okay. This will be a place where I can add to it if I want to. Not add a full trade on, maybe add a quarter or a half of my position just to kind of get in a bit more. I'm going to go and put an arrow here. I don't tend to add too much to my trades, but that will be the right place to do it if you want to do it. And kind of increase your risk because we already like in half the trade. We can add more to it and continue moving forward that way. Okay, again, we go down, we continue moving down, which is a good sign. And looks like our trade will be triggered quite fast. Again, another place to add to a trade. If you want to add more size because your trade's getting closer to is actually in profit already. Both trades are in profit. You can add to it. Move your stop loss to break even on the other ones. Another engulfing candle here. Good place to add to your trade. Continue moving forward. And actually we're triggered here. So trade is done. Trade is finished now. Boom. 4.2-to-1 with this simple trade. Okay. As you can see, the 15-minute chart can be kind of back and forth. We add the Bollinger Band to make it a more smooth layer to filter out the bad trades. And we're able to re-add to the position, increase the profit that way as we go forward. And that gives us a really nice setup, really nice trade overall. So that's how you do it. I hope this video gives you a good example of how to trade this reversal strategy in the Forex market. If you have any questions about how this works, post your questions or comment below. I'll be happy to reply to those. If you want to learn more about my strategy and the rules behind it, I have a free course that guides you through the Bollinger Band reversal strategy. Shows you all the rules, give you a checklist on how you can trade it step by step. That course will be linked below. You can check it out. It's a free course, 100% free, nothing to sell there. You can just learn the strategy, practice it, get some results, and I'm happy if you get some results that way. Make sure you subscribe if you haven't done yet. I publish these videos 3 times a week on YouTube, and I'll catch you back here in the next video pretty soon. Ciao.